I'm Nicole Rachat with Investing News Network, and I'm here at day 2 of the Minds and Money Conference in Toronto. And I'm here with Martin Murenbeeld of Murenbeeld Co. How are you today?
I'm very well, thank you.
Great. And how's the conference going so far?
Well, great. I had a presentation this morning and spoke for some 40 minutes, which went well. I think they were interested. I gave some, numbers for the gold price going forward. Not too exciting, some of the numbers, but I am somewhat optimistic, but probably more medium and longer term than near term.
So speaking of gold, it had another kind of rough quarter, this third quarter. Can you tell me a little bit about what happened to gold, what factors were affecting the price during Q3?
Yeah, I would say probably number one is the combination of, well, let me back up. Number one, the U.S. dollar went up. Number two, the equity markets went up. Number three, the real bond yield went up. So we look at the 10-year U.S. tips, and it rose as well. So those are three big strikes against gold.
Now, for those investors that currently hold gold, would you say that now is the time to continue to hold it, or is now time to sell?
No, I would not sell now because I'm inclined to think that you're selling near the bottom. And in fact, my own style is to hold it. I sometimes say tongue-in-cheek, have some gold in the portfolio and hope it doesn't go up, because if you're a diversified investor like myself, then the other 90 or 95% of the portfolio will rise if gold doesn't rise. But it's nice to have as insurance, and it's certainly nice to own it when it does go up. And if you buy the right sectors of the gold market, you have a chance of doing well, even though the gold price isn't going up. So I'm not one to be without gold.
Okay. And now we're talking about investors. What is one piece of advice that you have for gold investors during this current market?
Stay the course. The gold market does have cycles, and if you're really smart, much smarter than I am, you'll be able to sell at the top and buy at the bottom. I'm not, so I tend to hold a position, and I tend to maybe rotate from one company to another, or in and out of companies into gold bullion, and then from gold bullion back into companies. But essentially, I stay with it. And I think that that's what an investor should do. You should look at gold from a long-term perspective. I know that there's a lot of, advice, and so buy now because gold is going up $100 tomorrow and so forth. That's all great, and if it's true, great. But the reality is you want to be a longer-term investor in gold.
Now, looking ahead a little bit, what do you think 2019 will look like for gold in terms of supply, demand, and prices?
Well, the first thing on the supply side is that the evidence suggests that the mine output is going to stabilize, maybe even come off a little bit. So on the demand side, I actually don't look so much at demand. Obviously, we look at the Chinese demand and Indian demand, and it's reasonably stable. It goes up 100 tons or down 100 tons over the course of a year, which is not really that critical. What's much more critical are the factors underlying demand, which affect investment demand. And so then you get back to, certain financial variables. So it's very important for me, if I have a view on the U.S. dollar. Now, Trump wants the dollar to go down, but what he's doing is actually not helping that. So one of the things we're looking for in 2019 is a slight change in course. Hopefully after the trade war, there will be some resolution to the overvalued dollar. So we expect a little bit of that to happen. It's possible that later in 2019, the Fed starts to worry a little bit more about recession and starts to maybe even draw a halt to the continuing rise in interest rates. And then as the probability of recession starts to rise, you're going to have equity markets start to, do more hiccups, like we saw last week. And that's quite a positive for gold. So those are three things that I'm particularly interested in. And I think some of that is going to show up. Behind the scene, there are some other factors that are very big, like the global debt crisis. There's no easy resolution to the global debt crisis without some kind of reflation. People like to say monetary debasement, but some way out of the debt crisis without causing serious recession seems to me to be almost impossible. So we're going to have easier monetary and fiscal policies slowly but surely over time. So it's very possible that in 3 or 4 years we're going to be looking at maybe $2,000 gold, something like that. Yeah.
So then you probably definitely see the U.S. dollar going down in 2019?
The U.S. dollar is funny. It's been going up because the background to the dollar at the moment is a restrictive or more restrictive monetary policy and a rather relaxed fiscal policy. Now that combination of macroeconomic policies is actually quite currency positive. Okay, because it tends to raise interest rates, it'll draw capital from abroad because somebody's got to fund the U.S. deficit, and that leads to a larger trade deficit. So the way we're going now is the dollar up, but the U.S. trade balance is actually going to get larger. The trade deficit is going to get larger, which is, of course, exactly not what the U.S. administration wants. So we got to come to some kind of a resolution to that. And the only way out of this particular conundrum is if you can have some kind of international agreement that would devalue the dollar. Now, that's happened in the past, and I kind of had hoped that this year we might see more signs of that developing, but that's not happened. Trump has chosen the route of tariffs, which may have the end result that he's looking for, but at the moment the tariffs are actually making the dollar a safe haven. So that's another kind of stripe against gold here.
And this will be my final question, and just switching gears a little bit. What was one of your favorite gold stories this year, and what did it mean for the gold sector as a whole?
Oh, the favorite gold story. Got a good question there. There weren't that many favorable gold stories.
It's a tough one.
It says, I'm trying to think hard of what from my perspective, something that is favorable is the ongoing shift among central banks towards gold. Okay, so I think that's an important story, but it's a little bit behind the scenes. The combination of large currency reserves and the U.S. dollar being a component of those currency reserves, but the U.S. dollar being, a liability of the Federal Reserve, puts some central banks off. They prefer not to hold liabilities of the Federal Reserve. And now with Trump in the equation, there are countries that would prefer not to hold any kind of asset that is dependent upon the goodwill of the United States. So I think in that direction, there is some positive. But the ETF sector has actually been bleeding gold a little bit for the first time in several years. For the first time in, 15 years or maybe 16 years, the net spec position on COMEX has turned against gold. So it's hard to look for. So you tell me what you thought was what did you think was the big story?
I fully agree with that story as well.
Barely buying Rand.
I was about to say
something like
that was pretty recent, and that was pretty big, but that was one separate.
Yeah, but that's not in my sphere. That you got to speak to the gold equity investor for that. Okay, and do you think this is kind of a trend that will continue in 2019 with like when you were saying that there was like the shift with the banks and? Oh yeah. No, that is going to continue for sure. I think the Russians have made that very clear. The Chinese are not publishing any new buying of gold for their reserves, but I think underneath it they are. And I think other countries that, it gets complicated because, certain countries want to do certain financial transactions, which includes the SWIFT system internationally, and then the U.S. has a chance of blocking these accounts like Iran and other countries. And so, it's coming down to a situation where, a central bank or a government might say, you know what, let's not have too many US dollars because, we could get blocked because the US administration doesn't like us or that sort of thing.
Okay.
Yeah.
All right. Well, thank you so much. I appreciate you taking the time to speak with us today. Once again, I'm Nicole Rashad with the Investing News Network, and I'm at day 2 of Minds and Money Conference in Toronto.